So this is gonna be a lot more chill of a class. So for anyone watching this on YouTube, I'm just gonna, if I ever ask a question, I'll kind of show you the chat. But yeah. So again, this is gonna be more of a chill of a class. I'm going to be going over inversion setups where people take a loss on. So in order to do that, I need to know some setups where people lost, and I'm gonna go over them, and they're gonna be probably from this week. So again, if you don't know my iFVG model, make sure to go in the hashtag study section. You can watch it all on YouTube for free. Okay, or you can buy my course, but I'm not promoting my course. But yeah, go in the study section and go to the pin, and it's all for free. There's like 11 videos, and yeah, this is not going to be a class going over just here's how my inversion model works. I'm assuming most of you guys know what it is. All right, so we need to find some setups where people lost on. So if any of you took any losses this week and it was an inversion setup, would you guys mind sending it the time or the time frame, and maybe sending like a screenshot in chat so I can go over it? Because that's gonna, again, I don't really take too many losses myself. I don't think I took a single loss on an inversion all week. Moreover, I don't think I've taken a single inversion loss on stream in the last like 3 weeks or probably a month. So you guys are gonna need to send me stuff if you don't mind. Yeah, that's actually a good question. So starting off, if you guys watched my live stream when ICT joined on Friday, you kind of saw me use that 2-minute inversion instead of the 3. So if we go back in the replay mode, all right, there's a 2-minute inversion. Now, again, I am not looking in the market in terms of inversions. I'm literally looking in terms of liquidity. So when I saw this fast displacement under these kind of equal lows here, right, all I need is a singular fair value gap here in any time frame, whether it be the 2, 3, or 1, and I'll take that first close. I don't need to wait for the 3 here, because theoretically, from a liquidity standpoint, because we are already delivering off of this fair value gap here to the left, I don't like that's good enough. Like, that's liquidity. Speed under, speed back above. I only need a single inversion. That's my entry model. Let's say I don't really know the bias here. Well, then I probably would wait for the 3-minute. But you can see the 3-minute, just those horrible RR. So I ended up getting in the 2 because I'm like, okay, I'm confident the bias is bullish from a liquidity standpoint, so I longed because we're delivering on a fair value gap, right? So you can see that's clearly why. That's clearly, like, it's in terms of liquidity, not an inversion. A lot of people, I see the market in terms of inversion on a higher time frame, but these lower time frame entries, not really. How about the trade? Yeah, but that's not an inversion model, Teflon. It has to be an inversion model. Like, that wasn't even a model. That was just me gambling. That's the problem.
Not at T-Mobile. With T-Mobile's best Go 5G plans, upgrade when you
again, my entry for this one right here is just this close, okay? Right when this candle closes. And the nice thing about this is it doesn't close way above. It closes like perfectly. So it gives you could either get in the retracement, which is fine. And sometimes I like to sometimes what I'll see, how this is the 2-minute, right? Sometimes I'll go to the 1-minute. I'll be like, okay, is this also a fair value gap? And in this situation, it is. And that's like, if any of you guys don't like inversions and you only take like regular fair value gaps, this is a fair value gap that would be obvious. It would make sense for you guys to look for, because, okay, this fair value gap lines up with the 2-minute inversion. So that would give you a hint saying that, okay, this fair value gap should work alongside. Like, if you're looking for like the silver bullet or something, this could be it. I don't know. Inversions are just fire, man. Yeah, that's definitely you, Roger. So can I do you guys point out a loss you guys took? It's hard for me to go over an inversion loss because I don't know. Maybe I will be able to this week, but it has to be you guys. Yeah, Gabriel, I'll explain. All right, perfect. Euro USD right there. Okay, I'm gonna pull this up here. Do you have like the time and date that happened? Oh, I see. Wait. Yeah, I only trade during the kill zones. So, Malith, it's very hard for me to see this. So, the first thing I see with this is I really like this one. However, your stop loss is completely wrong here. Their stop loss is a close below the fair value gap. And I always say, like, you have to... The reason why I don't mess with the inversions that are like there's two of them is because, again, you guys get it. What if we hold this one and don't go to this one? Or what if we hold this one but break this one, right? We could bounce off of this one or this one here. So that's why I only like messing with the singular ones. So in this situation, your stop loss would be closed below the last possible inversion that we inversed. So it just, I don't know if this stopped out or not. I don't know. Maybe it wasn't stopped out. Maybe we did hit the internal high first. But for this one, I definitely think the stop loss is wrong because we could still bounce off of this and go up. Does that make sense? Malith, what happened after? Did we ever bounce or no? We went to the low? Okay, let me check. Then your higher time frame bias is probably wrong. Let me just verify this. What time frame is it on? The 1 minute? November? No, I don't think I can go that far, actually. Yeah, I don't think I can go that far. Yeah, alright. Well, Bert. Yeah, so for that one you sent me, again, stop loss is too big here. I wouldn't touch this one. There's too many inversions, too many variables, and by too many variables, I mean there's two inversions. I'd rather prefer if there's only one. So, don't really like this one. Yeah, that's my reasoning. Was it? It was on this candle right here, right, Malith? I'm assuming. Oh, 9th of January. All right, let me check 9th of January. All right, let's check this out. You said at 2 a.m. See, this one just automatically just pops right out to me. This is a perfect one. Do you know where it was? I don't see it. I'm not gonna get up to all your questions right now, guys. I have to scroll up. I'm gonna focus on one at a time. So for anyone wondering, here's a live chat. $2.15. See, this is 2:15. Right here, this is the 9th. I have on my YouTube. Again, this is going to be dedicated to mainly failed inversions. Okay, I'm not going to go over a million other things. Okay, now you're good. Alright, so, yeah, that one, that's what I would say. So I already went over that one. Alright, so let me just scroll back up. What was the next one? Okay, you took this one Tuesday. Let me quickly open this. Let's check this one out. Alright. Alright, so that's actually the loss I took, but I wasn't on my live account. I didn't like this one. Great example. So if we go back to Tuesday. Alright. He's talking about this one right here. So this one is just mainly a bias issue. Okay, let me just pull up chat real quick. So this one, although I do like it, it's mainly more of a bias issue. And the reason, what might be a reason you guys see that may make this more like a B minus, C plus setup right here? Is there anything you guys see in specific? Oh my god. I was about to say specific in this kind of leg of price. We did take out liquidity, yes. The low's taken, exactly. And we did not displace under this low, alright? So you can see price barely displaced under that. But there's one more kind of technical thing here. It's more technical. No, the stop was fine. It stopped out when it went way up. Yeah, where are we delivering from, Amy? What were we delivering from? Yeah, exactly. That's exactly Bruce. Okay. Amy was the closest. She said, "Where we're delivering from." It's not the OB. Like, yes, that does matter. Okay, but remember, I don't put as much weight on an OB as if we're delivering from a fair value gap. So I'm just gonna give it to you guys. So in this example here, we were holding another really obvious inversion here, and this is not an entry I would take because we do hit this internal high first and then we come down. But this is obvious enough to where it would make this iFVG 50-50 if we're kind of delivering from another iFVG. Okay, like this one is just too low probability because one, we weren't really getting price action that was really great in the moment, and two, we were kind of holding this other iFVG to the left. Even though it's not an entry model, it's still really obvious, and we still retrace to it after taking lows. So to me, this would definitely be lower to mid-tier probability. And yeah, maybe I would take this if on a live account, if I was truly bearish, and I did. I tried this on a demo account. Okay, I did short this on a demo account. But I didn't think it was a good live play because the price action, for one, again, we were kind of in the middle of the range, and two, we were kind of still bouncing out this. So those were kind of my two reasons for not liking that. All right. And I know a lot of people, they went long on that, which was good. Okay, if you went long on that, good job. Your bias is right. So that's just one where, okay, this long's gonna work. The bias is bullish. We kind of had a little entry highs up here, not the cleanest, but entry highs above. The bias is bullish, and the bias is actually bullish because the 15-minute, if you guys check out the 15-minute chart, you can see we actually inverse this 15-minute fair value gap right here. So that's how you would have known that the bias is bullish, because you can see this 15-minute candle clearly closes above this bearish fair value gap, which kind of helps tells you the bias. So that was a good one. And hey, I took a loss on that myself. It wasn't my live account because I didn't think it was high probability, but it's still one I did technically lose on. And again, just my bias is wrong. We were delivering from here. And I don't really put a lot of weight on, okay, we're delivering from an iFVG, but we were kind of holding it and it looked obvious to me, and we took out the lows, and we also had an SMT here. So I mean, those three reasons alone were enough for me to not take this one on a live account. All right. Let me go back up. Just trying to get to everyone here. Okay, so that's that. Hustle World. All right. This looks like a successful play. I'm not sure why you sent that, but good job. Good play. That was a good play. All right. How do you calculate stop loss? Again, the stop loss I really calculate. I've already gone over this, but again, I kind of guesstimate where we're gonna kind of close. So I'll put like an example of a risk reward box like here, or what I'm kind of looking for, and we'll generally close within this area. And if we close way up here, I'm sizing down way more. But I'll kind of guesstimate where we're gonna close. So I'll do this. I'll put in create a limit order here. I'll double click it, or I'll actually just do create limit, and and you can put however much you want to risk it. Won't let me create limit order for some reason. Oh, because I'm in replay mode. But I right click, I click create limit, and if you double click it, I'll put my risk, and I'll put my risk like 200 about, and then when I go to create limit, it'll put in the number of contracts for about a $200 risk. And if you're scared of, always whenever you're taking an iFVG, what you should do is make sure you are putting just a hard stop just in case, but kind of size a little, you can size a little heavier for the stop loss right here, because again, typically if we close below this, we're not going to hit the low at the same time, okay, most of the time. And this is the only thing that's bad about these iFVGs, how I calculate my risk. I do it very fast, and I do it in my head. So sometimes I'll put a buy limit of 5 contracts here, and then I'll put a buy limit of 10 contracts here. And as long as the candle closes somewhere in this vicinity, I'll buy the 10. And if it closes way up here, I'll size, and I'll do half size, and I'll do like 5. So that's typically what I do. I have a video on that on my YouTube if you want to watch that. You're bearish. Yeah, I would not have been bearish there. Again, you got a lot of low resistance liquidity here. We're already really low. Yeah, I would not have been bearish there. Let's see. You were crushing it till you got to March 1st, 2021. Yeah, I'll have to do this another time, Josh. I'll do a backtesting session this week in the premium, and you can watch that. Remind me to do this. A close below G-cap. All a close below means is if the candle closes above, right here's your entry. Right here's your entry, and if the candle closes back below, I would get out, because most times we close back below, we just keep going up. So here you can see, if you were to take this iFVG here, right, and you were to short the close right here, your stop loss would be when this candle closes back above it, because you can just see we end up going to the high after that. So that's what I mean by close below or close above. That's a BPR. BQ, this is an inversion, not a BPR. Again, I'm taking the inversion. The BPR is kind of formed after I'm already in. Okay, you guys gotta realize that. When I say not a loss, does that mean if he gets up that you already hit? Yes, basically ran. Again, a lot of these questions you guys are asking me can be answered if you watch my YouTube, but that's all right. So if there's 2 opposing PD arrays and prices between, does it matter? Yes. This is a great question. This is actually on DXY daily right now. The DXY daily is in between 2 major fair value gaps. And I'm not, I mean, I think it's bearish, but I'm not going to know for sure unless this is violated here, or unless this daily fair value gets violated here. So I would consider these opposing PD arrays 50-50, and until we trade outside one of these, I'm not going to try to predict it. All right. Again, I'm not going to go over MMXM in this class. Friday iFVG. All right, Friday iFVG and NQ 16.9. Okay, 16.97 inverse at 11.17. Let me check this one out. So 11.17. Okay. All right. All right. This was not good price action. Okay. This one was good. Yeah, this one was definitely good in my opinion. The only problem with this one right here is there was, again, this was the end of the kill zone, and I was not, one of the first things I said in the live stream on Friday was we had these 2 outside candles, and we had an outside and inside candle. And when you see this outside candle the previous day where we take out the previous day high and previous day low, you can see like it is not high probability for price to retake out a higher low that day. And because of that, and because of the holiday today, that was just everything after 11 o'clock on Friday was just so low probability because, one, it was still an inside day, and two, we have a holiday or bank holiday today. And that's more of a, you're going to lose that play and not know that until you get a decent amount of screen time, which is fine. And I understand that's going to be a loss that a lot of people are going to take, but I was already, again, I was kind of bullish here because we had data highs above, and I would not have shorted this either because, again, I was bullish till these data highs above, right? So I thought the bias was bullish, and I probably still, I think I'm still right. Again, it's just taking time to play out. But it's not high probability because, one, we had data highs above, we had an intermediate term high above, we are delivering from a bullish fair value gap, right? So I didn't think the bias was bearish here. And I know we had this dump, but I still don't think the bias is bearish, so this means nothing to me. And it was after 11 o'clock, so it's after the kill zone. We're kind of already delivering from a major fair value gap. And yeah, concept-wise, I think it was a good one. I didn't take it. I didn't call it on live stream. I was already no long at this point. I was bullish. Right, so this is not hindsight from here. Anyone who thinks this is hindsight, I did not take this in live time, and I was on stream, and I did not take it, okay? And I think it's just a bias thing. I think it's just, okay, we're delivering off of here. I'm not really looking for shorts here, and I expected this intermediate term high to hit because we were on the buy side of the curve at this point, and you can kind of see we got a lot of speed lower and a lot of momentum back up quickly. So I just figured none of these would work, and we'd probably go to this high, all right? So that was kind of it for me. And that's just a bias thing. That looks like okay. ES 10:15 on Friday. Let me check this out. I think this is the 1 minute. All right, ES 10:15 on Friday. All right. Okay, this one, right here. Again, this is one of the reasons I don't trade ES. I just don't like it. I mean, you're gonna see this all the time with ES. There's a much lower volume in ES than there is in NQ. NQ is just way more volatile. NQ always has a better shot of hitting these highs. I mean, you can see it was almost a break-even trade, but not quite. And yeah, this is one of the reasons I don't like ES. It just, NQ ends up hitting the high a lot more than ES does, and it's just, that's the nature in NQ versus ES and why I only trade NQ. Now, I actually used to be a ES trader. I used to, and it was a fact that ES was better than NQ. Like, I'm not even kidding, like a year or two ago, ES was the better one. But ES just completely changed because VIX has been so low, and it just hasn't been as good as it used to, in my opinion. And it's been a lot more kind of, it hasn't been bad, it's just been a lot more sloppy, and NQ kind of respects the inversion much better because a lot more volatility, a lot more movement, and it hits things faster. There's a lot quicker speed. ES just kind of is a little slower. It doesn't always hit the highs. Right? This is just one of the reasons I don't trade NQ or ES. So if I look at NQ at this time, let me see. This is my paper trade from today. You can see I took a 5-minute inversion here, and I end up getting stopped to break even the rest. So again, if I were to go to the 5-minute on, or the 1 minute on Friday, again, you can see at the same exact time, right? The same exact time that ES had this inversion activated, you can see what was NQ doing at the same time. Let me turn on the crosshair real quick. Okay, what was NQ doing at the same time? At the same time, NQ hit that intermediate term high. See right here? And that created an SMT. So you just have to be aware of that, and which is why I watch both NQ and ES, because when you see ES not take out the high and NQ does take out the high, you typically want to scale more than usual. Okay, so if I were to see this, I would have scaled a lot more in NQ than usual. Or if I was in ES, I would have scaled a lot more in ES than usual because I see it doesn't hit this high. So that's just an SMT. Okay, that's a bearish SMT. And you just have to be aware of both indexes at the time. So it's not like this really failed. It's just NQ hit the target and ES didn't. So it just created a bearish SMT. Okay, last Friday NQ. Let me check this one out real quick. All right, so this one was just not a good one in my opinion. Okay, and the reason why is because I was already in. Like, you should have already been in this trade when I took it. Okay, the trade is the first inversion we get here after delivering from here. Okay, right, this is going to be your first trade because boom, we get a lot of displacement down, a lot of displacement right back up. Here's your trade. Why would you want to enter 5 or 10 minutes later after we already hit the first equal high target here? It's just not high probability. Maybe if these equal highs weren't here, I would have thought about it. But again, you should have been in from here. This was not a good play. Here is the play. Much more riskier up here. This is going to have a much lower win rate. This is still a fine play, but it's going to have a much lower win rate. Okay. And yeah, the fact that we barely displaced above these equal highs is not a good sign for this holding. So maybe it would have been a different story if those equal highs weren't there. But again, outside day, the market didn't really draw to any of the higher low day that day because of the outside bar and inside candle. We had the holiday on Monday, and this was the play here. That's when I got in. And again, this is going to work sometimes. Sometimes it's not going to. You can see price just ends up getting really sloppy after 11 o'clock. And that's just kind of a, okay, we have a holiday on Monday, just kind of a screen time thing. So that was, again, I just did just go over this one. So you can see that was an SMT for Roseman's. Again, a lot of people are probably going to miss that because they don't watch NQ and ES. All right, this, again, so this one is also an SMT MRF. All right, this one is an SMT as well. Okay, if I go to the YM charts or whatever, okay, and the NQ. Again, just a big SMT that you kind of missed, and you have to watch out for these SMTs. Okay, YM ended up hitting this high, and you can see NQ did not. Okay, so if I were to go back here, right here, you can see YM already took the high, NQ did not, and we left equal lows below. Okay, we left equal lows below. So I'm always cautious of longing with equal lows below, even if it's an SMT. And yeah, it's not surprising they get a bearish SMT, especially with equal lows below. So that's just one thing you got to be careful of, because you're going to get screwed if you don't see an SMT and leave equal lows below. Again, one of my 2 rules is I try not to long with a bearish SMT, even though I did because I'm dumb. And my other rule is I try not to long with perfect equal lows below, and these were pretty close. So again, they're on the higher time frame. They're really far apart. I felt like these are important, and yeah, just not the best long. You would never take this because of bearish SMT and equal lows below. So that is why for that one. So for this one, yeah, I probably just want to touch it. I'd go to the higher time frame and see if there's more than, like, let's say this right here combined into a singular one in like the 3 minute. I actually would long this one, and I would move my stop to break even when we get to this, and I'd see if I'd gamble that we're gonna go buy it, but that would only be if I'm confident in liquidity. So maybe if this combined into like a 3 or 5 and it was a singular one, then I would long it. But in this time frame, definitely not.
But most noses call them gain cent beads. Try gain cent beads. Way fresher than detergent alone.
How much do I consider the daily bias? Quite a bit. I more look at like the hourly and 4 hour and what kind of liquidity pools were in between and kind of where the momentum's heading. I do not encounter slippage. I use futures. There's almost no slippage for futures, so unless there's like news. If I join your Discord, are you live? Or, yeah, I go live every single morning on my Discord, and it's basically just how Friday went on my YouTube. So, again, if you can't watch the screen, it might not be as worth it, but you can go back and I upload the private, most of them, not every single one, but I upload like the recordings. What do you mean scaling more / less? I'm not sure. Oh, I'll like sell more of a position if I think that if I know even outside candle and it's not an inside candle or whatever, I'll sell more than usual at like a really closer take profit. Okay, so maybe I think we're gonna go to high day, but it's an outside candle and we're in an inside candle. Well, maybe I'll sell like 75% here instead of trying to hold past here, risking that we're gonna go to the high day. Okay. And you can see I made the right decision on Friday. I was mostly out here, I think. All right. All right, this is a good one. So this one was from the 1 minute on. Let's see here. January 3rd. I can't go back that far, I don't think. Let me see. January 3rd, 10:40, 1 minute. I'll try it. Oh, I can. Alright, cool. Alright. All right, let's see. So we got this. This is a good one. Nothing wrong with this one, in my opinion, for now. Let's see here. First glance, this looks really good. I bet you this does work, but you don't realize it. I bet you it probably holds a 2 minute maybe. Let me see. Let me see if there's a 2 minute one here. If not, I'll be very surprised. Okay, the 2 minute one fails as well. Interesting. Okay, this 3 minute fails 1, 2. Okay, let's check the 4. Let's check the 30-second. I can't. Yeah, I mean, I think that was a legitimate loss, if I had to guess. It looks good. I'm trying to think. I wonder if J-Pow was speaking that day or something. We may have had a Fed speaker. Again, you got to realize, just because it looks good does not mean it's good, because I will stay out of this, especially how close to 11 it is, if there's like a speaker or something that day. Let me just verify and check. So it was Wednesday the 3rd. I'm trying to see, like, would this be a legitimate loss I would take? I know for a fact I didn't take this play, and I forgot why. There was some reason I was on live stream, and I remember I saw it and I didn't take it. So it was Wednesday the 3rd. Okay. Yeah, FOMC minutes. Yep. Now I remember. Okay. Yeah, so we had FOMC minutes that day, and I didn't really like it because, again, I don't like the trade before FOMC minutes, and you can see what happened when we got the FOMC minutes. So that's just the news thing. I typically am done trading, especially because we already expanded down and hit sell side. At that point, I'm not taking this. I know it looks textbook, but the FOMC minutes is going to make it more sloppy. It's going to throw the price action off, so I don't trust it. And you can see whenever we do have news, you have to be more loose with stops. The stop before news, a stop below is always not going to be the case, especially in news, because you're going to see price gets a lot more sloppy. So this is just a good example of, okay, we had FOMC minutes. You can see sloppiness in price here where we close under, then back above. And yeah, that was my main reason for not taking that one. I remember there was a reason why I said I didn't like it. I forgot what. All right, one more. Let's go over one more example. All right, Would you prefer the first highlighted fair value gap or the second? Let me check. I would prefer the first. This big one here. Because we clearly sweep sell side. This is the first fair value gap. It's a lot of speed down. Clear close over. I'd 100% prefer this one. Yes, I would want to see this hold as well, but it's a lot more riskier, especially if it gives you an obvious entry here, if that makes sense. Does that make sense? Again, this is the obvious entry, and yes, I would like to see this hold. Like, let's say I was already in the position, I would want to see this hold, but this would definitely be the better entry in my opinion. And that is a NAS 100. I would not suggest looking at CFDs. That is, I call that scammer language, but it's up to you. Let me check this one out. Oh yeah, the previous one on January 3rd. Yeah, I remember that now. Yep, I remember that, Max. Yep. This is just the Forex thing, man. I'm gonna be honest. I don't like Forex. This always happens to me with Forex as well. And yeah, nothing you can do. Forex is just not clean. This is literally like a Forex trait. Everyone who's traded gold knows this feeling, or Forex. Like NQ will most times hit this target. Again, there's nothing you can do about that. And that's why I scale. I scale a lot quicker in Forex as well. So that's just definitely a Forex thing. And that's a break-even trade. This is a break-even trade for me because I'll scale some here. It looks like about 1 hour, and then I'll go break-even. Yeah, and then gold, yeah, just gold always hits under liquidity, and then we obviously hit it later. And gold, I just hate gold for that reason. So, I think that's gonna be it for now. Yeah, do you guys find that helpful? Kind of going over some fair value gaps or inversions that I don't like. Okay, good. How can you trade CFD charts? Don't. If you're really in a tight budget and you don't want to buy live data, then again you have to trade US 100 or US 500. That's how you're gonna learn. But if you can pay for live data or maybe download, I think you can get live data for free on TOS or Thinkorswim. Do that, but yeah, that's gonna be it. Or Apex, yeah, but again, they might not want to spend money. They might want to paper trade. So, dude, guys, I just made a big mistake. Oh my god. Now I recorded, but my Spotify music is playing. I wonder if there's a way I can cut out my desktop audio. Does anyone know if there's a way to cut out my desktop audio in OBS? Yeah, I know. It's for my YouTube, though. Alright, well, that's going to be it for the recording. I don't even know if I'll upload this, but we'll see.